Joining us now to talk about Facebook's crypto plan and much more is Jeremy Liew. He is Lightspeed Venture Capital, an early Snap investor. He's also an investor in the latest venture from our guest host, Imran Khan, who's the CEO of Verishop. Both of these gentlemen worked together when it came to Snap. And Jeremy, why don't you just talk a little bit about when you first met Imran and how your friendship came together?
Yeah, absolutely. We were the first investors in Snap, and so had been involved with the company since inception. And when Imran came on board as Chief Strategy Officer, we got to know him very closely as well, given his very important role at the company. And so as he started to roll off from Snap last year and started thinking about what was next, we started talking a little bit about what it was, and we got very excited about the opportunity with Verishop.
Let me quote back something that you have said. You've said, like the alumni of PayPal and other great companies, Snap employees will go on to build a new generation of startups. We're thrilled to partner with Imran and Kate Khan to fund the first of the Snap mafia. So what excites you about Verishop?
I heard you guys talking a little bit about the huge market in e-commerce and also competing with Amazon. And I think what's interesting is if you look at some of the most recent well-performing IPOs, companies like Revolve, companies like Chewy, Stitch Fix, which is a portfolio company of ours as well, you see that the companies that have been most successful in the public markets, have built the most value, have been multi-brand retailers, which have, in one way or another, competed with Amazon and taken them on and found areas where they are not strong and been able to demonstrate that you can build multi-billion-dollar companies in the space.
One of the things we've been talking about with Imran is just how this is different than a situation like Snap, where there's very low barriers to entry. In a situation like this, you actually have to go out and build a warehouse. You have to buy all of the merchandise and hope that people will come and buy it from you and create that sort of customer place where they want to be. Is this different from many of your other investments that you make?
I think that you find two different kinds of companies that venture capitalists invest in. You've got the brave new world companies like Snap, and you've got the better, faster, cheaper companies like Verishop, and both can build a lot of value.
How do you kind of decide between those two sides of investment? Do you have different standards when it comes to each of those different types of companies?
Well, a better, faster, cheaper company like Verishop, it's really about executional excellence. And so the quality of the management team and the quality of the founders and their experience is really critical in terms of being able to build that, because it really is about being able to deliver on a value proposition against a market that you understand and make sure that you can build the organization that can do that. A brave new world company like Snapchat is about a founder's vision to imagine something that doesn't exist today, and to have the drive and product chops to be able to deliver on that. And so both can be incredibly valuable companies, and they just require different sorts of management teams to go after them.
Jeremy, what do you think about the news we've heard today with Facebook talking about this new cryptocurrency or new something that it's going to be launching? I'm not even sure it's a cryptocurrency, but it is something that is going to be looking for a way to bank people who either aren't banked or who would like to do their banking through a platform like Facebook.
It seems like a really smart move by Facebook. If you think about, here in the U.S., we have the rule of law. We have pretty high levels of trust in the government to manage the monetary supply. We have pretty good faith in our financial institutions. And so we don't necessarily see the need for a stable coin of the type that Facebook is launching with Libra. But if you look to parts of the developing world, that isn't necessarily true. And if you think about, if you were in Venezuela or parts of the Middle East, parts of Africa where the governments are less stable, where the financial institutions are less stable, if you were able to store your wealth in currency, you may well have more trust in Facebook and the organization of corporations that are backing Libra than you might have in your alternatives in those places.
Hey, Jeremy, you're sitting in the middle of Silicon Valley, where there's a huge debate right now, not only over privacy, but of size and scale. You have a business here in Imran going after Amazon. I asked Imran the question, so I'll ask it to you. Do you look at a Facebook? Do you look at an Amazon? Do you look at a Google and say that there's a problem with the size and scale today?
I'll leave that to the regulators to determine, but I will say that as a funder of startups, I don't worry about the opportunity for startups to build businesses against incumbents like Amazon and Facebook and Google. And I think that there's plenty of existence proof that companies can be successful. And you look at the rise of TikTok, for instance, in the social networking space. You look at the rise of Stitch Fix in e-commerce, and Chewy and Revolve, as I mentioned earlier, all had very successful IPOs in multi-brand retail, competing directly against Amazon in many instances. And I think that if you look at those big companies, then perhaps any company can only really have 3 priorities that they can focus their teams on at a time. And after they've put their A teams on their top 3 priorities, then the next few priorities might have their B team, and the next few priorities have their C teams. And so it's tough to beat the A teams for Amazon, Facebook, and Google, but a startup that's focused, that only has one area of focus, can certainly beat the B or the C team of any of these big companies.
So if the Department of Justice or FTC called you or even called your portfolio companies and said, do you have any problems or examples of behavior that are problematic, you would say nothing?
No, I'd say that there are some instances where I think Yelp has gone on record, for example, with some challenges that they've had with Google and review data for local businesses. And I think there are some other examples out there. I'm just saying that it's not impossible for a startup to beat these guys. Whether or not the playing field could be more level, I'll leave that to the regulators to decide.
What, Imran, when you start hearing some of these things too, I mean, talking about big regulation going after Amazon, does that play into any of how you kind of went after this, thinking that Amazon is going to be preoccupied with some of these issues or won't be able to be quite as aggressive as it has in the past?
Honestly, I did not think any of those things. That didn't get into equation. Again, I think constantly, if I've seen that in advertising world, like with Snap, right? I think people always think it's a zero-sum game, but not one company can solve all the problem. There are some things Amazon does phenomenal, and I'm a shareholder of Amazon, and we buy every day from Amazon, but I think there are other things that we can do better, and that's what we're trying to do, and the market is very large.
When will you know if you're succeeding? What are the metrics that you're watching right away? What do you expect? Is this going to be a slow ramp as you have to get the word out, or what happens?
Yeah, I think it's a great question. I think, yes, I think it will be a slow ramp. And I think if you look at all those e-commerce companies, it takes a long time to build. I think you really need to understand your customers, how to serve your customers better. Some of the metrics we'll be looking at is our retention rate, our repeat rate, our average order value. Those are the things. But I think one of the key things we want to do is we want to be maniacally focused on consumer experience. We want our customers to be happy. And if we can do that over time, we can build a big business as market continues to shift online.
How many brands do you think you ultimately need on board?
Yeah, so we started with more than 160 brands, and I think we're projecting on more than 300 brands by the year end. I think, once you get to a few thousand brands, in the categories that we have, you start saturating it, and so I think we're going to be more and more.
Okay, so what's the bit you can pitch them right now? What's the one big brand you'd like to see on the platform?
Look, I think we talked about Allbirds. We'd like to have Allbirds at some point. We don't have shoe categories right now, but I think we'll get into that category next year. And when you go there, we'll definitely be in conversation with them.